However, what makes me wondering about their total revenue is the recognition of 48 million deferred revenue with regards to their... Hello everyone, welcome back to our channel. But if you're new to this channel, then please click the subscribe button and also the like button so that you can help this channel to grow. In this video, we're going to talk about an analysis on the Tesla's Q2 earnings report. As expected, Tesla had posted a positive net income in Q2 given that it had delivered 90,650 cars from the period of April to June 2020. Of course, they have saved a lot as well from employees' compensation due to factory shutdown brought by COVID-19. Tesla had beaten Wall Street estimates as being compiled by Bloomberg as it had reported a revenue of 6.036 billion compared to their expectation of 5.4 billion in Q2, against 6.35 billion year on year. They have a net income of 129 million in Q2 compared to a net loss of 389 million in last year's Q2 of 2019. This figure results to a generally accepted accounting principles or GAAP per share of 50 cents versus a loss per share of 1.06 as expected and year-on-year of 2.31 per share. Meanwhile, earnings before interest, taxes, depreciation, and amortization or EBITDA is 1.209 billion or comprised of 20% EBITDA margin compared to first quarter of 2020 which is 15.9%. And last year's Q2 of 572 million. Though their total revenue is still off, having only 5.179 billion this second quarter of 2020 compared to last year's second quarter where it recorded a total revenue of $5.376 billion. Bottom line, it's able to generate a gross profit margin of 25.4% compared to last year's second quarter of 18.9%. It shows to us that the management had done effectively their cost measures. As a result, they had accumulated a free cash flow of $418 million versus Wall Street expectation outflow of $617.9 million, which is amazing, as they did it amidst the pandemic crisis. Having an operating margin of 5.4% just proves that Tesla just lived their moniker as the new most valuable auto manufacturer in this generation, having a market capitalization of 262.818 billion compared to Toyota's 172.77 billion as of the closing of July 24, 2020. With continuous government support, the company shall continue to have positive operating results. In fact, $428 million of the revenue in Q2 is from regulatory credits, an increase of 21% quarter-on-quarter and 286% increase year-on-year. However, what makes me wondering about their total revenue is the recognition of 48 million deferred revenue with regards to their full self-driving feature, which is still under testing. That is, technical feasibility have not established just yet. Therefore, accruing a revenue to this service in which two of the three revenue recognition criteria under generally accepted accounting principles or International Financial Reporting Standards or IFRS is not hereby met, such as the product or service must be performed or delivered, and most importantly, the title of ownership has been transferred to its new owner, even not audited. This error or this deviation from recognition of revenue criteria leaves me a questioning mind if this full self-driving feature of Tesla shall be automatically updated on the existing units billable to current vehicle owner, which to me is not an excellent customer service as well. What if I don't like an extra cost from my extra vehicle, right? What if I don't like to have a self-driving feature? However, adjusting this amount would not make Tesla having negative operating result, as they have a total net income of 104 million. So adjust this one, their net income would be 58 million. But for me, it is still material that each retail investor must consider with regards to the company's integrity. Though, to be fair, like I said earlier, this one has not been audited by PricewaterhouseCoopers. With this positive quarter's result posted by the company, it qualifies them to be included to S&P 500 list, which may signal another rally for its share price, though it's still subject to approval of S&P 500's committee. But the question is, are they going to deny Tesla's inclusion to that index? Given the company's growth rate, which is not only emanates from auto sales but also to their energy business and solar energy, it is too hard to ignore the potential or earning power of Tesla. They already disrupt this industry. In fact, once they're included to that index, they can be at number 13 or could be at number 10 among S&P's 500 list of companies. Actually, as of July 21, it's at number 13, just a slim margin away from JP Morgan, MasterCard, Procter & Gamble, and Walmart. Non-inclusion of Tesla may be a big loss to fund managers having total investment of $11 trillion that track to that index. Maybe some of them would invest directly to Tesla stock or might shift to Nasdaq. Though it could give the prime index more volatility due to its nature, as investors has fear on the bubble of AV industry because they believe that the industry or the EV market, which actually overvalued in terms of valuation currently compared to their sales. But we are investing to the future. We believe that these companies in the electric vehicle industry would generate a big or significant cash flow on the next 5 years. Actually, Tesla is continuously expanding its business, aiming more than 1 million of deliveries in succeeding years. In fact, they had prepared that plan. They are going to build the next big factory, a US gigafactory in Texas, where Model Y, Cybertruck, Semi-truck, and Roadster will be manufactured. Their Berlin factory also in process of construction or development. Their Shanghai is also in process of construction for Model Y capacity, while they have an ongoing capacity for their Model 3 with 200,000 units capacity to produce. So what it means? This new production capacity would mean that the company can able to expand its sales territories regionally or worldwide, as this is being strategic, right? This USA will cater the North American market and the South America, particularly Canada. This Texas factory is actually designed for Eastern North America to support the sales. Meanwhile, Berlin will produce the Europe sales, while China will support the Asia Pacific on the rest of Asia, especially the China, which is considered as the world's biggest EV market. With that increase of production regionally, it can enable Tesla also to lower their price so that they can compete with the China's EV market as well as in Europe. They can offer now their cars at lower cost due to the savings on importation, freight, and duties, and other incidental costs in shipping those units. Tesla also had funds to complete this development, as they have $8.615 billion of cash and cash equivalents, current assets of $15.336 billion, while current liabilities at $12.270 billion, resulting to current ratio at 1.25:1 this Q2, and improve its days sales to 17 days compared to Q1's of 25. So this number just shows us that their working capital is at good position. That is, they won't be having a problem with regards to their liquidity. Though, Tesla has low financial leverage with high debt-to-equity ratio of 249:1 on their most recent quarter in Q2 of 2020, which for me actually is quite alarming. However, the company had able to generate positive cash flow and promising to building enormous or significant free cash flow and continuously producing a positive EBITDA, which is actually the main point or the first consideration of financial institution to giving them a loan or loan extension. Therefore, Tesla can negotiate for restructuring or refinance of terms or terms refinance of their existing loans, which to date they have a long-term debt sum up at $13.286 billion. So as an investor, I don't have to worry with regards to their solvency because they are able to generate positive cash flow, and with the benchmark that is normally being used by financial institution for refinance or extending another terms of loan or another loan support to Tesla is doable. So, is Tesla's stock a buy? At a current price of 1,417 as of the closing of July 24, actually it dropped. The price dropped from 1,600 it posted last Wednesday because on the current tension of China and US. So therefore, it's actually a good entry point. Any entry point below $1,500 or $2,000 for Tesla is a good one. That's all for today, guys. So if you want also to check about the feasibility on investing on Hyliion, you can check my previous video. And also for the feasibility of Spartan, check that one. It could help you on your investing decisions on the EV world right now. So if you like this video, kindly click the subscribe button, also the like, and also leave your comments so I can answer right now.